Just a standard risk disclosure before today's video. I'm not a financial advisor or trading expert. I'm simply a trader that likes sharing a bit of what I know. Trade at your own risk. I hope you enjoyed the series. Hey, welcome to my 8th video in a series I'm calling Back to the Basics, where we'll work on covering all of the basic fundamentals needed to start trading futures. From beginning to end, I want these videos to be straight and to the point, focusing on all areas of knowledge needed to start taking trades and build that confidence within yourselves. In the last video, we talked about basic price action rules to learn and follow. In today's video, I specifically want to talk about the types of market orders and some risk management tools that we can use in order to maximize our gains and minimize our losses. So when we talk about types of market orders, we're talking about specifically entering the market now. These are the types of trades that we're going to take in order to get our trade in the market, capitalize on moves, and make money. So what I'm going to do is drag this panel over to the side. It's going to help me be able to talk about the different types of market orders a lot easier. And what I'm doing here is this is all market replay. So I'm just going back in time to replay market data. And so I can show you exactly what it looks like when you're placing trades. So if you're trying to enter the market at any price level, at the next point that you can get into the market, you want to enter on a buy market order or a sell market order. These market orders up at the top are going to get you directly into the trade as soon as you can. So if I click buy market right here, I am now into this trade. Let me get rid of those things for just a second. So now I'm into this trade. I've bought in at a certain price level. The market filled my order. And now I'm in this trade. And as you can see, I'm losing money. To get out of that trade, because I bought into it, now I need to sell those 2 contracts that I have. So I go over to sell market, click sell, and that gets me out of the trade. That's a simple market order. It gets me in and out at that specific price level, wherever it's at. Now, NinjaTrader has this really cool feature, which stands for Advanced Trading Management. So what this ATM strategy allows you to do is set up an automated strategy where as soon as you enter the market, you can customize it so you have a price target that you want filled, as well as a stop loss in case prices reverse on you and you need to get out of that trade. So let's say that I don't have any strategy in place, right? If I just buy into the market, wherever it's at, I'm now in the market, and the only way I can get out is if I manually sell my 2 orders. And if I want to short the market and I click sell, I'm anticipating prices are going to go down. The only way I can get out is to buy back into the market, right? They're just inverses of one another. But now what this strategy allows me to do is now if I enter the market, I've configured my settings in a way where if I enter the market, I have a price target in place here, and then I have a stop loss. So if I'm buying and I'm anticipating prices are going to go long, but I'm wrong and they reverse, they're going to get me out of the trade before prices can go any lower. So I have my stop loss down here. Now I have 2 price targets here. One is for a quick scalp to get in and out of the market, and the other one is used as a runner. So in case prices continue to go higher, I can capitalize on making more money as prices rise. And as prices rise, I can move my stop loss up to either break even or continue moving it up so that I could continue to make money. So let's see what this kind of looks like in real time. If I press buy, I'm in the market. I'm going to go ahead and play it here, and you'll see prices are going to try and continue pushing up. They're pushing back. Prices went against me and stopped me out. So before prices could go any lower, I cut my losses and I get out of the trade. Now, on the other hand, let's just say I'm back into the market here and I want to try and capitalize on this move here. Prices are pushing up. Prices immediately filled me for the scalp, and then my stop loss was brought up to break even. And now we have a runner at play. I can continue to trail this stop loss, so I'm not losing any money. I can continue to follow this, and I'm already at 6 points, 7 points, up to 8 points. And I can continue to try and trail my stop loss until eventually I'm kicked out. But at least I capitalize on the move and I make some money. Now those are buy and sell market orders. Actually, let me pause it once again here. So when you right click, you've got some options here. You got sell limit orders, you got buy stop market orders, buy stop limit orders. I believe this one stands for market if touched orders. I don't really mess with these, but I specifically trade with limit orders. So whether it's a stop limit or a sell limit, that's what I'm really trading with. So what this means is if prices are continuing to go up, I want to enter a buy stop limit order. What a limit order allows you to do is buy at a specific price point. So if I go up here, I right click buy stop limit order. I now have this stop limit order in the market that if it's triggered, I enter the market. Now what we're going to do is go back in time a little bit so we can demonstrate this. So if I right click, I go to buy stop limit order. I'm going to place it one tick above this bar right here. So I have a stop limit order that's ready, and it'll only be triggered if prices come up to touch this price level here at 95.25. So when I press play, prices may wait a little bit, but they're not going to get me into this trade unless prices hit this stop limit order. So my stop limit's ready to go. As I wait a second, prices are slowly starting to come up here. And as soon as it hits that stop limit order, it immediately fills me for my scalp, and I have this runner at play that I can continue to manage. That happened very quickly, but that's essentially what a stop limit order does. So now we're going to go back in time a little bit here again. So if I'm above this price level right here and I right click, I'm going to get certain options, right? We talked about a buy stop limit order. If I did a sell limit order, right, and it looks like this, prices are going to get me into a sell order to short the market if prices hit this level. So if I put a sell limit here, as soon as prices hit this sell limit order, I'm going to be entering an order to go short. So if I press play here, let's see what happens. As soon as it hits this price level, it gets me into a sell limit order. I'm anticipating prices are going to go down, and it's got my price targets in place here. But as we know, prices will continue to go up and stop me out. But that's a sell limit order. Okay, back in time again. Now that's if I right click above this price line. If I right click below the price line that's here, I'm going to get a few different options. Rather than getting a sell limit order, I'm going to get a buy limit order. What this means when I press it is I have orders ready to go that are buy limit orders. So when prices pull back, if it hits this level right here, this price level, it's going to fill my order, and I'll have a market order to go long into the market. So now if I press play, if prices pull back, they pulled back just enough to get me into the market, and now I'm in at a better price by a few ticks. I'm in and out of that trade a lot quicker. That's a buy limit order. I'm telling the market I want to buy in at a certain price point, and that I'm not looking to buy for more. I'm not looking to buy for less. I'm looking to buy at this specific price point. All right, so for the purposes of this video, again, going back in time, rather than going long, let's pretend that we're trying to go short. Right, so I'm playing. I notice we have a new low. Prices come up and down for a first entry short. I'm looking for a second entry short. Again, just for the purposes of this video. I'm not saying this is where we would trade, but we had a first entry short looking for a second entry short, right? So I want to put in a sell stop limit order to go short. That limit order says, hey, I want to enter at that price level, no higher, no less. If I entered a sell stop market order, that's going to fill me in wherever the market's trading at. So I may be filled for a tick above or below what I'm actually looking for. And when you're scalping, each tick matters so much. So I really just try and focus on the limit orders. So I have a sell stop limit order that's ready to go, and I'm looking for a second entry short to trigger below the bar here. So what I'm going to do is place my stop limit order to go short. We have a first entry short looking for a second entry short that just triggered. And so now I'm looking to capitalize on that scalp. I'm looking to capitalize on the movement of the market. And I was filled. I went for 2 points. That would have been $100. And now I have this runner, and as it moves, I can try and get that filled. Already at 6 points, and now 6.5 points maybe. Off one contract, that's at least $400 off that trade. So it happens very quickly, but that's how those market orders work. What I encourage you to do is definitely play around with paper trading and just practice entering the market. Don't try and enter where you think you should enter. Just practice placing orders. Don't be afraid to right click, sell limit order. What this means is if prices pull back and they touch this, I'm going to enter a sell limit order. Boom, sell limit order looking to go short. There's my price target. And then you got a stop loss up here. And if it hits that, you're going to lose money. So let me close out of that trade real quick. Let me show you the settings of how I'm actually specifically able to do that. So at ATM strategy over here, what you can do is edit, and you'll have this box that pops up. Order quantity, 2 contracts, good till cancel is what this stands for. Parameter type ticks. We want to be working with ticks. My first price target is going to have a profit of 8 ticks, right? That's equivalent to 2 points. Stop loss, I just have it at 12. And then my runner, if prices continue to run up or run down in my favorite direction, I just have a profit at 24 ticks. Stop loss also at 12 ticks. Now with each specific target that you have in place, you can have a stop strategy. and that's under custom. When you click edit, another box will come up. I have my auto break even profit trigger at 9 ticks. So if prices go 9 ticks, my stop loss will immediately move to break even, so I can't lose money. You could also have an auto trail feature. So as prices continue to move in a direction, that stop loss will follow it based on the parameters that you set. Same thing for the runner here. If I go to edit, my auto break even profit trigger is also 9 ticks. I like when they work together. So if I want to enter a buy stop limit order, bring this market order down here. I want to enter a stop limit order. I'm following prices here. And as soon as I get into the market, I'm in the market and immediately have my profit targets in place, my stop loss in place. And as soon as I'm filled, prices move 9 ticks, my stop loss was automatically brought up to break even. And it's nice having that stop loss in place because if I'm wrong, let's see if I can get myself to be wrong here. So prices continue to move down in my desired direction. If I'm wrong and prices move up, this stop loss is going to get me out of that trade so I don't lose any more money if prices continue to move up. So it's very important to have that stop loss in place. It's part of risk management. Now, I know there's a lot to cover when talking about these sort of things. I really tried to condense it the best that I could and just give you that introductory lesson on different types of market orders and the way that you can manage those trades when you're trading in the market. So I hope you were able to find this video somewhat beneficial. I do have a few live trades on my channel. I highly encourage you to go watch them and watch how I right click and I put my orders into the market. You can see exactly how my profit targets work and how my stop loss works. Again, it's very important that you paper trade and you learn how to use the system before you actually use real money, because you don't want to be losing money off silly mistakes. So get comfortable paper trading now that you're at least somewhat familiar with different market orders and you're that much closer to understanding a little bit of the verbiage and the things that we talk about in these videos. That's going to be it for today's video. I appreciate you guys for watching. Strive for excellence in all that you do, and I'll see you next time.